Are you curious about the hype surrounding Bitcoin and other digital currencies? Today, we are venturing into the exciting world of cryptocurrency investing. You've probably heard about Bitcoin, Ethereum, and other digital currencies making headlines. But what exactly is cryptocurrency, and should you consider investing in it? Let's break it down. At its core, cryptocurrency is digital or virtual money that uses cryptography for security. Unlike traditional currencies, it's not controlled by any government or financial institution. Transactions are recorded on a decentralized network called a blockchain, ensuring transparency and immutability. Think of the blockchain as a digital ledger that's distributed across many computers around the world. Every transaction is recorded as a block and added to the chain, making it virtually impossible to alter or hack. The most famous cryptocurrency is Bitcoin, but there are thousands of others, each with unique features and potential. Some, like Ethereum, enable the creation of decentralized applications and smart contracts. Others focus on privacy, speed, or specific use cases within various industries. So, why are people so interested in cryptocurrency? Well, there are a few key reasons. First, there's the potential for high returns. Some early investors in Bitcoin and other cryptocurrencies have seen incredible gains. We've all heard the stories of people turning a small investment into a fortune. Second, cryptocurrency offers a way to diversify your investment portfolio. By adding crypto to the mix, you may be able to reduce overall risk and potentially boost returns. It's like not putting all your eggs in one basket. If one asset class underperforms, others may help balance things out. Finally, the decentralized nature of cryptocurrency appeals to those who value financial autonomy and freedom. It's a way to take control of your money and participate in a global financial system without relying on traditional banks or intermediaries. But before you jump in, it's crucial to understand the risks involved. Cryptocurrency is known for its volatility. Prices can swing dramatically in short periods, leading to significant gains or losses. It's not uncommon to see double-digit percentage changes in a single day. This volatility can be exciting, but it also means you need to be prepared for potential losses. Another risk is the potential for scams and fraud. The cryptocurrency market is still relatively unregulated, which can attract bad actors. Always do your research and be cautious before investing in any project or platform. If something sounds too good to be true, it probably is. Lastly, the technology behind cryptocurrency is still developing. There's always a risk of technical glitches, hacks, or unforeseen developments that could impact the value of your investments. It's important to stay informed and understand that the landscape can change quickly. So, how can you navigate this volatile market and make informed investment decisions? Here are some essential tips. First, educate yourself. Learn about blockchain technology, different types of cryptocurrencies, and the factors that influence their prices. There are countless resources available online, including articles, videos, and courses. Don't just rely on social media hype or tips from friends. Take the time to understand the fundamentals. Second, start small. Don't invest more than you can afford to lose. Cryptocurrency is a high-risk investment, so it's wise to allocate only a small portion of your overall portfolio to it. Think of it as dipping your toes in the water before diving in headfirst. Third, diversify. Don't put all your eggs in one basket. Invest in a variety of cryptocurrencies to spread your risk. This can help protect you if one particular coin or token experiences a significant drop in value. Fourth, use a reputable exchange. Choose a well-established and secure platform to buy, sell, and store your cryptocurrency. Do your research and read reviews before selecting an exchange. Security is paramount when it comes to your digital assets. Fifth, have a long-term perspective. Cryptocurrency investing is not a get-rich-quick scheme. It's about believing in the long-term potential of this technology and being prepared for ups and downs along the way. Think of it like planting a tree. It takes time to grow and bear fruit. Sixth, stay informed. The cryptocurrency market is constantly evolving. Stay up to date on news and developments that could impact your investments. Follow reputable sources and be wary of misinformation. Seventh, secure your investments. Use strong passwords and two-factor authentication to protect your cryptocurrency wallets and accounts. Consider using hardware wallets for added security. Your digital assets are valuable, so treat them with care. Eighth, don't panic sell. When the market experiences a downturn, it can be tempting to sell your investments out of fear. But remember, volatility is part of the game. If you believe in the long-term potential of your investments, stay the course. Emotional decisions rarely lead to good investment outcomes. Cryptocurrency investing can be an exciting opportunity, but it's essential to approach it with caution and a clear understanding of the risks involved. By educating yourself, starting small, diversifying, and having a long-term perspective, you can navigate this volatile market and potentially reap the rewards. Remember, investing is a personal journey. What works for one person may not work for another. Do your own research, assess your risk tolerance, and make informed decisions that align with your financial goals. If you're unsure, consider consulting with a financial advisor who specializes in cryptocurrency. And remember, this is just an introduction to the world of cryptocurrency investing. There's always more to learn. Stay curious, stay informed, and most importantly, invest responsibly. Need to keep your screen looking busy? Sign up for our free email newsletter. Don't forget to like, subscribe, and get notifications for more money mindset makeover content.